Hello, First Quantum Leader, and welcome to the first unit of understanding the elements of the balance sheet. Today we'll be looking at an overview of a company's balance sheet and understanding what you will find in each section. At the end of this unit, I'm going to ask you this week to identify the various assets found on your site and identify if they are non-current or current assets. The balance sheet is a snapshot of the assets and liabilities of a company at a specific point in time. So the first thing we learn is that the balance sheet is as at a particular point in time, as opposed to the income statement, which is over a period of time. There are only two things you will find in the balance sheet: assets and liabilities, nothing else. The assets can be divided into two categories: non-current assets and current assets. The first section of First Quantum's balance sheet shows the current assets. These are defined as things we own, which are either cash or expected to become cash in the near future. The first line is cash of $1,138 million, or just over 1.1 billion. Just below that is trade and other receivables. These are companies to whom we've sold our product and have not yet paid us. So First Quantum is trying to collect the $512 million and turn it into cash. Just below the trade and other receivables, we find the inventories, which are the minerals that we've extracted but have not yet sold. They're sitting in our warehouse. When they're sold on credit, so turn into trade and other receivables, which, when collected, are turned into cash. So the $3,152 million of current assets, about 3.2 billion, are things that we own that we are trying to turn into cash, or already are cash. As opposed to the non-current assets, which are things that we own that we're not trying to turn into cash. These are the things we need to run the business. By far the biggest number in this section is the property, plant and equipment. These are all the diggers and machinery that are required to conduct the mining operations. If we sold them all for cash, then we would not have anything with which we can mine. It will also include other assets such as tables, computers and chairs. Now, there are some other items in both sections that we've not mentioned, but the amounts are relatively quite small. So First Quantum has total assets of $24.7 billion, of which $3.2 billion is either cash or going to become cash soon, and the rest, $21.5 billion, is needed to run the business. Now, let's look at the bottom half of the balance sheet. The first section is called current liabilities. These are amounts that we owe, liabilities that we have to pay soon, current. And by soon, we mean within 1 year of the balance sheet date. We can see that there is a bank overdraft of $615 million and trade and other payables of $737 million. This latter figure represents suppliers who've supplied us with goods and services, but for which we have not yet paid. Total current liabilities is $2.5 billion. So if current liabilities are amounts that we owe and have to pay soon, then non-current liabilities are amounts we own we do not have to pay soon. In effect, we will need to pay them in more than 1 year from the balance sheet date. The biggest number here is debt of $7.4 billion. This makes sense. First Quantum has borrowed money in order to buy the property, plant and equipment, the non-current assets, to run the business. There are also some other provisions and also deferred income, which relates to the money the company's received but not yet earned, i.e. payment in advance on some of our contracts. So First Quantum has total liabilities of $14.1 billion, being $2.5 billion, which is due to be paid within the next 12 months, and the remainder, $11.6 billion, being due at some point in the future. Now let's consider what might happen if First Quantum ceased trading and shut down. This is, of course, hypothetical. First Quantum is worth much more as a trading company. The first thing to do would be to sell all the assets, put them on eBay, and turn them into cash. That would give us $24.7 billion. We would then have to pay off all of our liabilities of $14.1 billion, and this would leave us with $10.6 billion left over. What would we do with this leftover cash? Return it to the shareholders. This is the final bit of the balance sheet and is called the equity in the business. For First Quantum, this is $10.6 billion. There's a bit of rounding in my numbers. The equity is accounted for as a liability, but we don't call it a liability. Why not? Because First Quantum is, as we mentioned, trading and expected to continue to trade for the foreseeable future. You are what's known as a going concern. So the equity is a form of voluntary liability. You can pay it to the shareholders, but you don't have to unless you close the business down. As opposed to the liabilities, which are amounts that you owe and you have to pay. They're compulsory. Your suppliers and lenders will be very unhappy if you do not pay them. So we've now identified the 5 key elements of the balance sheet: current and non-current assets, current and non-current liabilities. Deducting the total liabilities from the total assets gives us the net assets. This net assets figure is the same as the equity, which is why the balance sheet is called the balance sheet, because it always balances, i.e. the net assets always is equal to the equity. If it does not balance, then there's a problem and we need to get the finance team to investigate. So the balance sheet is a snapshot picture of the business at a particular point in time. It shows the assets, things we own, and liabilities, amounts that we owe at that point in time. Nothing else. Liabilities can be further categorized between amounts we owe to third parties and have to pay, and the remainder that we owe to the shareholders, which we do not have to pay. As I mentioned earlier, at the end of each unit, I will invite you to complete a task. Most of these tasks will get you to actively do something, which will help you to reflect, learn, and embed your newly acquired knowledge. Each task builds on the last, so make sure you do them all. They won't take you too long, and they're also designed to fit into your working day. So on to your task for today. This week, identify the various assets found on your site and identify if they are non-current or current assets. In the next unit, we'll be looking at the non-current liabilities and shareholders' funds in more detail. Looking forward to seeing you then.